Okay guys, this is quite a breather. You've done much more difficult questions than this one, so you shouldn't have spent a lot of time to complete this question. Manchester, on 1 January 2013, they decided it would be better if they stopped playing football and they only sold jerseys of other successful football clubs. Manchester fans did not agree with the club's decision and started protesting against it. On 31 Jan 2015, a violent protest took place that resulted in the warehouse where the jerseys were stored being burned down. Luckily, Manchester is insured for 30,000 rand. They couldn't have had a lot of jerseys for that amount. Manchester is a registered VAT vendor. The VAT rate is 14% and they have a 30 April year end. Inventories are accounted for using the periodic inventory system. You obtained the following information from the financial statements, which were not affected by the fire for the year ended 30 April 2014. The previous financial year. Sales, opening inventory, purchases, purchase-related costs, sales returns have to be deducted from sales, and closing inventory. So clearly I've got all the information on hand here to work out the gross profit percentage. Then they tell us that the total freight distance in the 2014 financial year for sales was 2641 kilometers. Sales. Sales got absolutely nothing to do with inventory because it has nothing to do with purchases. So I'm not interested in that. But for purchases, it was 2983 kilometers. The cost per kilometer for both freight charges was 3 Rand per kilometer according to the invoices. Invoice price always include VAT. During the busy Christmas period, December 2013, so that's last year, Manchester increased their selling prices due to the high demand. According to the invoices, VAT inclusive, the sales during the period total 15,641. Inventory was sold at cost plus 60%. None of the items sold during this period was returned. So there's our little cost formula. 100 plus 60 equals 160. You were able to obtain the following information for the period 1 May to 31 January, and 31 January was the date of this riot. Good. They tell us there that our sales was so much, sales returns we have to subtract from that, purchases was so much, purchase related cost was so much, and then freight charges for the purchases was 2155.74 kilometers at a total of 2 Rand per kilometer according to the invoices, so once more inclusive of that. Then the third one, as customary, Manchester increased their selling prices over the Christmas period and the amount received. So amounts paid, amounts received, invoice prices, listed prices, those four will always include VAT. So the amount VAT inclusive for the special sales 18,514 and inventory was sold this year at a different markup percentage. So 100 plus 50 equals 150. Included in the inventory balance on 31 January 2015 were jerseys with a cost price of 3,580 that was not destroyed because it was somewhere in the basement. So they give me the cost price. I don't have to worry about that. Cost price will always be the cost price at what the inventory was recorded at. So that cost price will be a VAT exclusive price. A required calculate the amount that Manchester would be able to claim back from the insurance company. So they didn't give you last year's figures for nothing, so you're going to start using last year's figures in order to determine what was the normal sales gross profit percentage. Again, the picture of the puzzle is my trading section of my income statement. Sales less cost of sales. What does cost of sales comprise of? Opening inventory, purchases, purchase-related costs, closing inventory, and the difference between sales and cost of sales being gross profit. Good. They gave me in the question my total sales 435,000, but there was sales returns of 800 Rand. So therefore total sales 434,200. Cost of sales. They gave me my opening inventory 56,000. They gave me my purchases 301,870. Purchase-related cost, because it's non-claimable duties, it must be capitalized in total, 515. And then the freight cost on purchases is also a purchase-related cost, but remember that 3 Rand per kilometer is according to the invoices, so it will be 2983 kilometers times 3 Rand divided by 1.14 because we have to take out the VAT. There it is, 7850. Good. So my opening inventory, they gave it to us 56,000. Our purchases, that was the 301,870 plus the import duties of 515 Rand. You could have shown it separately. The freight charges, we've already spoken about that. And then the closing inventory, which they also gave us 42,300. They told us in this specific year we had special sales of 15,641, but that was the invoice price. So we have to take out the VAT. And then they gave us the markup percentage. So we also have our profit formula. So going back there, we said, well, there's our special sales, 15,641 divided by 1.14, taking out the VAT. Applying our profit formula, our cost of sales must be 100 divided by 160 multiplied by 13,720. And that gives us cost of sales of 8,575. We have total sales, we have special sales, so therefore that amount of our normal sales, that is actually a balancing figure. So that is a balancing figure 420,480. Good. Now we have determined what is total cost of sales because we have all these figures here. So if we take the opening inventory plus the purchase and purchase-related cost less closing inventory, that will give us then the total cost of sales. Because we have our total cost of sales and we have worked out our special cost of sales on the special sales, it means that we can also now calculate as the balancing figure what was the cost of sales on normal sales. If we have the sales of normal sales, we have the cost of sales of normal sales, then obviously we can work out what is the gross profit on normal sales. And if we have the gross profit and we have the sales, we can work out our gross profit percentage. So 105,120 divided by 420,480 gives us a normal gross profit percentage of 25%. Listen guys, on what? That is basically on our selling price. So if we want to write our profit formula right here and there, how would it look like? Our profit equals 25 of what? Of our sales. So that's our selling price. So what is our balancing figure to make this equation balance? It's our cost. So our cost then must be 75. So there's our normal profit percentage or not normal profit formula. Good, then they also give us the information for the current period up to the date of the riot, 1 May to 31 January. Sales, 213,875, and there was sales returns of 238,5. So our sales for this period would have been 213,875 less than 238,5, which gives us a 211,490. They also tell us that purchases was 148,806 and non-claimable duties is 230 Rand, so I can capitalize that full amount. So 148,806 plus 230, 149,036. The question also tells us that there was freight charges once more, and this freight charges applicable on purchases was 2155.74 kilometers multiplied by 2 Rand a kilometer, but that's according to the invoices. So we must remember to take out the VAT. So 2155.74 times 2 divided by 1.14 gives us a 3782. Good. Again, according to the question, they give us the sales proceeds for the special sales, and they tell us that the amounts received was 18,514. And they give us our profit formula. They say inventory was sold at cost plus 50%. Now, because we have received that amount, we must remember to take out the VAT, and then we can apply our little profit formula. So 18,514 divided by 1.14 give us special sales of 16,240. If we're going to apply our profit formula then is going to be our sales times 100 divided by 150, and that will give us our cost of sales. So 8514, take out the VAT, so 16240, then VAT exclusive, times 100 divided by 150 gives us 10827. Good. Now we have that figure there. We are going to apply last year's profit percentage in order to get to our cost of sales on normal sales. So here's our little formula that we have actually derived that after doing this calculation. And we see that cost of sales is going to be 75 divided by 100, i.e. 75%. So 75% of our sales figure. Now again, we have total sales and we have special sales. So the balancing amount will be our normal sales. And then based on our normal sales, we're going to apply the 75% cost formula to get our total cost of sales of 146,438. If we now add 146,438 with a 10,827, it gives us now total cost of sales of 157,265. So 42,300 plus 149,036 plus 37,802 minus that 147,265 will give us the value of our closing inventory, which is 37,853. Now we have our theoretical inventory on hand when at the date of the riot. The question wants you to calculate the value of the claim that we have lodged. So the first thing that we had to determine was our theoretical inventory level as at the date of the event. However, everything was not lost. They've told us here that inventory with a cost price of 3580 was not destroyed in the fire. So therefore our total loss is not our total closing inventory, it will be our closing inventory less the 3580, which gives us 34,273. The insurance claim, we're going to apply the averaging clause. And the averaging clause is the first one that you know or that you want is your insured amount. So somewhere they've told us that we were insured for an amount of 30,000 Rand. So it's your insured amount, 30,000 Rand, divided by the value of your theoretical closing inventory, 37,853, multiplied by the actual loss that we've suffered, 34,273. So the value of the claim is 27,163. There was none of this damaged stock that could have been sold to a third party. So the value of the claim will then rest with the 27,163. I just have to add VAT to that amount of 14%. So the value of the total claim that we will submit is 30,966.